Let's check the markets right now. They're doing pretty well, actually, although we have seen higher in pre-market activity. There you are. We're all green on the screen. The NASDAQ is the biggest winner, up over 108. Ken Fisher joins me now. Ken, great to see you, as always. Economic growth. Let me just talk about that in general. We saw the last print we had for GDP growth was 3.3% annualized. This week, Powell said it would be just about half of that. What do you think about economic growth in the country?
You're not going to like this. Thanks for having me on. The economy's doing okay, but there is no right answer to your question. No one should overly fixate on GDP or any other monthly or quarterly government-created macroeconomic releases. It's just all two-way, phony baloney precise to the decimal point, more precise than reality allows for, and also way too wildly swinging. After initial releases, GDP numbers are revised more times than MSNBC can say stupid stuff for, sometimes over 2-3 years.
Well, the bottom line is that the interest rates are so high right now. A lot of companies, big corporations, can absorb those costs, and maybe even the tariff costs as well. But the smaller companies can't. They are not borrowing right now as much as they would like to, which means they're not able to hire as many people, which means we have slippage on the jobs front. No?
Yes and no. So you're 100% right. Availability of money is actually the key issue. How eager are banks to lend? Because if the banks are ready to lend and a quarter point makes a difference on whether you should borrow the money or not, you shouldn't borrow the money in the first place. The fact is, bank lending actually is increasing right now. It's increasing around the world, and that's because globally the yield curve's been getting steeper, and a lot of that's been driven because long rates have been going up as they have the last few days in America, making banks more eager to lend because the core business of banking is taking in short-term deposits as the basis for making long-term loans. They're getting more eager to lend. They're lending more. This is improving.
Of course, the Fed is still paying them over 4% just to park their money at the Fed. Should that end?
I have been a Fed critic pretty much my entire 50-plus year career. I'm reluctant to stop being a Fed critic now. But the reality of the Fed, unfortunately, is that they are mandated by Congress to a near impossible act that they can't accomplish successfully. They're trying to govern the economy by thinking that if they make this little wiggle in interest rates, it'll do that to the economy. Milton Friedman said when I was a teenager, that'll never work, it never has, and it never will.
It does seem, we had Judy Shelton on earlier, she says they think they control the economy right now. But what you're saying, what she says, no, they don't, but they're acting as though they do.
When William McChesney Martin was head of the Fed, longest running head of the Fed ever from 1952 to 1968, he said, when you become head of the Fed, you take a little pill and it makes you forget everything you ever knew, and it lasts just as long as you're head of the Fed. They all take Martin's pill.
Yeah, they do indeed. Ken Fisher, what a pleasure to see you, my friend. Thank you very much. Best to your family.
Thanks for having me, David.
Absolutely.